least we got Sandeep on.
Of all people.
Sandeep's gonna like this plan, or should I say his wife is gonna like this plan. Um,
Well, let's rock and roll.
yep, let's do it. All right, guys. So we're gonna start diving into some products. All right, getting into some meat and potatoes here. And I want to start with my personal favorite, and that is Manhattan Life. And one of the biggest objections you're going to get with Life is right out of the gate, right? As people are like, "Well, who the hell's Manhattan Life, right? Is that not that life insurance? It sounds like life insurance. It's actually health insurance, and Manhattan Life does indemnity health insurance better than any other carrier on the product or on the market. Excuse me. And it's not even close. As we get deeper into this and we start doing, some other product trainings, and I show you guys indemnity plans with Allstate and with UH1 and with Philadelphia American. The three of you will always be able to think back and say this isn't even close to what Manhattan Life offers, and it's true. Um, so Manhattan Life is the best indemnity plan on the market, and you will get that objection right out of the gate. Who the hell is Manhattan Life, right? And so I'll tell you a little bit about Manhattan Life. First of all, they've been in business for 175 years. They have stayed in their lane. Okay. Since I've been in this industry, Manhattan Life has done nothing but indemnity. And they even have had since I was introduced to them anyway, put it that way. So I was introduced to them probably about maybe 15 years ago. And they were they were doing indemnity. They were one of the leaders in the industry when it came to indemnity, and their plan was called Affordable Choice, which is still called today. So they've stayed in their lane. um, but their biggest claim to fame is going to be when um, when the Affordable Care Act became the law of the land in 2014. The Obama administration wanted to do away completely with private health insurance, right? He didn't want any alternative options to the marketplace. He wanted to drive everybody to the marketplace, right? And that's why you'll see in some of the states like California, New York, and Minnesota, that those states haven't let any private carriers in. It's marketplace or bust in those states. So in 2014, that was one of the big projects. Let's get the marketplace up and running, get it out there, get people enrolling in it, and then let's attack the private health insurance market and let's get rid of short-term plans. Let's get rid of indemnity plans. Well, Manhattan Life's big claim to fame, and it's literally if you're ever at a conference one day and Manhattan Life is speaking, this is the first thing that they will bring up. The guy up there will get, his chest will get all puffy and he'll get all excited and he'll say, "We took on the Obama administration," and they did. They actually led the charge. They led the lawsuit. It was their lawyers that led the charge of the lawsuit, fighting for their right to exist. Right. So, in other words, the Obama administration tried to get rid of them. Tried to do it legally. Say, hey, this is not health insurance. People cannot buy this as health insurance, and it was Manhattan Life's lawyers that defended their stance, and the case went all the way to the Supreme Court, and they actually won. So that's their big claim to fame. And why is that important? Because a lot of the times when you're talking to a prospect and that they've got private health insurance written all over them. They're healthy, they make some money, right? If you put them on the marketplace, the premium's going to be $2,000-$3,000 a month for their family, and that you can take them the route of Manhattan Life and get them a reasonable premium of $500 or $600 for their family. So you're talking about it, and they're going to love that, right? They're going to dig that, right, on the price tag. But there's a good chance that person is automatically anti-marketplace, right? They're automatically anti-ACA. When you're talking to somebody who buys their own health insurance, um, this isn't their first rodeo, right? They a lot of times will know what's out there, especially when it comes to the marketplace, right? They're going to know that the Blue Cross Blue Shield plan for their family costs $2,000, right? And so they're anti-ACA, right? They're not about the marketplace, right? They want to go in the direction of the private health insurance market. So when you start saying, "Hey, Manhattan Life is one of the best private health insurers in the industry," they were actually the company that fought the Obama administration all the way to the Supreme Court and won their right to exist. That right there earns them some credibility. Okay. Because I'll tell you, right out of the gate, you will get that objection of who the hell is Manhattan Life. Okay. So, Manhattan Life, been in business 175 years, led the charge against the Obama administration in 2015 and won the case at the Supreme Court for their right to exist and for consumers' rights to be able to purchase Manhattan Life as standalone health insurance. All right. So that being said, let's dive into Manhattan Life. Let me get rid of this little window here. All right, how do I get rid of this window? Zoom controls. There we go. All right, so this is going to be the home page. All right, manhattanlife.com. When you get your writing number, this is where you're going to get to the producer portal over here. Okay, producer login. So we'll click on that. And you'll obviously pop a username and password in, but this is going to be your dashboard. Okay, this is where it's going to take you right when you log in. All right, and guys, there's a lot of I mean, we could be on this call for 8 hours, right, going over this portal and all the different things that exist back here. But I'm just going to point you in the direction of some of the things that are available. Okay, so first of all, off to the left, if you see the in-force business tab, this is where your clients are going to be listed. All right, agent policy lists. All right, you can take a look at your clients and look them up as you need to service them. Claims is a nice little thing. Every once in a while, I'll go and I'll check the claims. In fact, I just noticed today that one of my clients had a pretty significant claim, and I called him and just wanted to make sure that he was working with the advocacy team to get everything resolved and get it done properly. So in-force business, you'll spend some time in this tab. Okay. Agent tools, okay, is another tab you'll spend some time in. The training library is where you're going to find, obviously, all of the meat and potatoes of the product training. Okay. And I strongly suggest that once you get your writing numbers for Manhattan Life, that you spend some time in the training library. Okay. You've got training videos, which is where I do all of it. Okay. If you click here, you see it's password protected. ML training, all right, is the password. You click here, pop in that password, and you're going to see videos for the Affordable Choice Plan, which is the base plan. We're going to get into that in a minute. You'll see videos for the accident plans, the critical illness plans, the dental plans. I mean, every product has its own video, all right? And they do a much better job than I'm going to do right now of going into all of the policy nuances and all the little details, right? Right now, I just want to spend this time showing you guys the broad overview of Manhattan Life, the main products, how to, run some quotes, how to enroll, and kind of how to move around the back office a little bit. Okay. So other things in agent tool, under the media gallery, this is where you can get some marketing tools if you want to do some marketing on your social platforms. All right. They've got all their approved logos and still frame marketing posts that you could steal and use. There's a commissions tab here, okay, but I will tell you that it's almost worthless to ever click on it. The commissions tab is extremely confusing and it never lines up with what's actually going in your bank account. To find that, you'll go to downloads. All right, downloads is where you're going to find your commission reports. So under downloads, generated reports. All right. And you'll be able to, get your most recent commission statements, whether it's, PDF or CSV file. All right. So that's where you're going to find your commission stuff. Okay. So on the dashboard, this is where you're going to start in order to run quotes. All right. In order to enroll customers. And this big button right here that says quote and enroll. All right. That's where you're going to go. Okay. So the main product that you're going to sell with Manhattan Life is the affordable choice. When you guys, when this all starts to click for you, you're going to notice that whenever we're selling a health insurance package to a client, it's always with a base plan, right? A main policy that is basically the policy that your customer will get cards for, right? And they'll stick their cards in their pocket, and that's what they're going to show, when they go to the doctors and whatever, move through the healthcare system. And then we're going to layer it with supplemental products, right? With accident plans and critical illness plans and dental and vision plans, right? So gap fillers, if you will, right? So the base plan with Manhattan Life is called the Affordable Choice Plan. And why does indemnity make sense? Okay, so let me back up just a second right now and kind of talk to you a little bit about why you would go in this route. I mean, I told you a little bit about who Manhattan Life was, right? Been in business 175 years. Actually, it's 176. The 175th anniversary was last year. So 176 years they've been in business. They fought the Obama administration in 2015 and won their right to exist all the way to the Supreme Court, right? That's building some credibility, right? But more importantly, the actual type of health insurance that it is, if you guys were on last week's training, when we got to the presentation, right, when we're about to present to a prospect, the first thing we do in the presentation is we have to build our case, right? We have to explain to them why we're selling the product that we're selling, right? Well, and the way we do that is we educate them on what's available, right? So what's available in the individual health insurance market? Number one, you have the ACA, right? You have marketplace plans. Well, you don't want a marketplace plan, Mr. Jones, because you don't get a subsidy. You don't need coverage for pre-existing conditions. You guys are all healthy. You don't want an HMO network, and you damn sure don't want to pay, $2,000 a month. Can we agree on that, Mr. Jones? Yeah, we can agree. Cool. When it comes to the private health insurance market, you don't want a short-term plan because the policies expire, right? And if God forbid, one of you or one of your family members gets sick halfway through the policy, and as soon as that policy expires, then we've put you in a bad spot, right? We then have put you in a spot where not only are you left without coverage, but you're uninsurable at that time, right? And I actually had that happen to me, guys. I used to be a big advocate for short-term medical, but that was over the minute that I had a client who was diagnosed with cancer, and the policy ran out in the middle of the year, and I couldn't do anything else with her, right? There was nothing else I could do with her. Luckily, I had, some critical illness plans in place and things like that, but she was, she had no insurance for the next 6 months until we got into, the ACA season. We were able to enroll her in a marketplace plan. So that right there, I never wanted to be in that situation again, right? So for the but you explain that to Mr. Jones, right? To your prospect. Does that make sense, Mr. Jones? Yeah, that makes sense. Great. You don't want to do a health share plan, Mr. Jones, because it's not insurance, right? You can't call it insurance. It's sharing, right? And, we want to make sure that you have a signed contract from a multi-billion-dollar insurance company and a promise to pay. I mean, that is the definition of insurance, right, Mr. Jones? It's a signed contract with a promise to pay, right? So we don't want you to have a health share plan. Makes sense? Yeah, that makes sense. And so that leaves us with indemnity plans, right, Mr. Jones? Now, indemnity plans for the main purpose of the fact that they are permanent, right? They're guaranteed renewable. As long as you continue to pay your premium, you will always have the option to keep this policy in place until you turn 65, right? At which time you age into Medicare. Um, so, I explained to clients or to prospects at that point, right, that it, going this route ensures that we always have options, right? Does this mean that we're going to enroll you in this plan and keep you on this policy until 65? No, just because it makes the most sense today doesn't necessarily mean that it's going to make the most sense 6 months from now, even, right? When open enrollment comes around. But at least we have, let's say you get cancer with short-term medical, right? Once that short-term medical expires, you only have one option. You have a marketplace plan. That's it. Your options are over. Okay. Let's say you have an indemnity plan and your client gets cancer, right? What are your options then? Well, you could get rid of it at the appropriate time and jump on an ACA plan, or you could keep it as your standalone, right? Because it offers enough coverage for your treatment, or you could keep it and get an ACA plan on top of your indemnity policy and double dip, right? But at least we put the client in the position to have options, right? And that's what we want to do, right? We always put them in the best spot. Okay. So, and one thing I've noticed, guys, is customers that understand indemnity plans and how they work, they usually love them, right? Yeah, you're going to have your clients that will not be able to wrap their head around the concept, right? They're just the traditional way is the only way to them, right? They understand deductibles, they understand copays, they don't understand reimbursements and benefits and things like that, right? It's the traditional way or no way for them, right? But the clients that get it, that this clicks for, they love it. I mean, I've got clients out there that have been on indemnity plans for over 10 years now, and I couldn't get them to come off it if I wanted to. They love it, right? It works well for them. They love, being a consumer of their healthcare, and that's really the main position of these companies, like Manhattan Life, who does indemnity better than anyone else, Philadelphia American, that is their number one competitor, right? They have the position of these are consumer-based products, right? We want to give these products to the consumers and give them the ability to actually be consumers of the healthcare system, right? Teach them to be consumers, not just blindly move through the healthcare system with a health insurance policy that we pray is going to work the way that it's supposed to work until ultimately we become victims of the healthcare system, right? So anyway, um, off my soapbox a little bit. So back on track here. So Manhattan Life is, again, they do indemnity better than anyone else. It's a permanent policy. It's affordable. And you're going to have to take a little bit of time with your clients to explain to them how it works. And that's what we're going to do for you right now. So we're in the quoting platform. Okay. And the first thing you're going to do, just like any other product, is enter your zip code. So I'm just going to enter my zip code that the town I grew up in. So Lombard, Illinois, 60148. All right. My date of birth. Okay. 1180. All right. And I'm not going to add any, my family members. We're just going to quote me as a single male right now. Okay. So you put the basic information in that you need to put in to start. And here's where you would add dependents, right? If I was going to add my wife, I'd add, wife, spouse, her birthday, and then click add. Okay. I could add a spouse, I could add a child. I'm not going to do that. Okay. Just going to be me. And then I'll view products. It's going to tell me all the products that are available in Lombard, Illinois. Okay. Here's where I'm going to build my package of Manhattan Life health insurance coverage. The first product is, like I said, the affordable choice. That's the base product. Okay. We're going to build off of that. So I'm going to click on the affordable choice and I'm going to spend probably the next 20 minutes or so on the affordable choice specifically. Okay. And then we'll wrap it up by touching on some of the supplemental products that we'll build around it. Okay. So, but affordable choice has 4 levels. You've got your classic plus, your elite, and your elite plus. Okay. And down here is where you can pull a brochure. Okay, you've got your brochure in English, your brochure in Spanish. All right. So let's go ahead and download our brochure and let's go over it together. So, real quick, if you guys aren't familiar with indemnity plans and how they work, okay, I'm just going to give you a quick overview on that. So, an indemnity plan works in the complete opposite direction of a major medical. Okay. For example, a major medical is going to have your deductible and your co-insurance, which is going to be your responsibility. That's going to, need to be paid first. And then your health insurance kicks in, right? Once you meet your deductible and your maximum out of pocket, then you're covered up to an unlimited amount or a specified amount, right? The indemnity plans work in the exact opposite direction where you get the insurance benefits up front. Okay. So there's no deductible to meet. Okay. No deductible or co-insurance. Regardless of let's say, well, whether it's a visit or a diagnostic test, or you're hospitalized for something, the policy is going to define the amount of benefits or the amount of coverage that you will get for each specific service or visit or test, right? And then if there's any leftover, if there's any amount left over on the bill, that then becomes your client's out of pocket. Okay. The goal with these policies is for your client to always receive health care at a price tag that comes in under the benefit amount. Okay. And well, how do you do that, Drew? Well, that's transparency pricing, care navigation. That's what the advocacy team is for, right? That's their job, right? We'll talk about that later on. Okay. But that's how an indemnity plan works. Okay. So an indemnity plan is going to define the benefit amount for anything that you could be billed for, right? A specific visit or test or procedure, and that's the amount of coverage that you're going to have for said visit or test or procedure, and then your out of pocket is either on the back end. Now, if there's if the cost of care comes in underneath the benefit level that is provided, then the excess indemnity, it's called, gets refunded to the policyholder in the form of a check. Okay. So, give you an example. Let's say the doctor's coverage is $200 for the visit. Okay. So, I have a $200 benefit for a doctor's visit. I go to the doctor charges me $150. Okay. There's a $50 gap there, right? It's called excess indemnity, right? So, there's excess benefit on the policy. The $150 will get paid to the doctor, and the remaining $50 will go to the policyholder. Guys, it's not uncommon at all for clients to put checks in their pocket with these policies. Okay. Especially if, again, you have a customer that understands, okay, this is how my policy works. And I'm going to make sure that if I need to get an x-ray, right, and I have a $200 benefit for an x-ray, I'm going to go to the imaging center that charges $1.25 or $1.50 for that x-ray. So I can come out a little bit ahead, right? Or at least nothing above 200, right? So I don't have any out of pocket. Okay. And that's why clients love these policies. Okay. So that's how an indemnity plan works. Okay. So back to these policies specifically, here's our 4 levels. Okay. Again, classic, classic plus, elite, and elite plus. All right. The very first line item on the top there is inpatient room and board coverage. Okay. So hospitalization coverage. Now, this benefit here, okay, is just covering room and board. If anybody's been hospitalized in the past or anybody that's seen a hospital bill, you know that it is itemized, right? It's not just a balloon bill that says, here's how much the whole hospitalization costed, right? It's itemized, right? So the hospital has a bill. They're like the hotel, right? The room cost. And then the tests that you have done and the doctors, that comes in and sees you. The doctor has a bill when he comes in and sees you. The anesthesiologist will have a bill. The surgeon will have a bill. The MRI that you had when you were inpatient will have a bill, right? Those are, like, call them your incidentals, right? So this strictly talks about what is covered for room and board. Now, the average room and board cost is about $2,500. Okay. And you guys can actually Google that and type in average room and board cost. So let's say you're selling to a prospect in Louisiana, right? And they're like, oh well, 3,000 a day or 4,000 a day if I'm hospitalized. Um, a hospital bill for 3 days can cost $50,000, and this plan's only going to give me 3 days, only going to give me 12,000 if I have the elite. Well, yeah, you're right, but again, keep in mind that this is just room and board, right? If you're hospitalized for 3 days, you maybe had a surgery, you certainly had some diagnostic tests, right? You've got benefits for all those things, and they're going to add up. Okay. So room and board is, again, about $2,500 a day on average. Some states going to be a little higher, some states going to be a little less. Most of the plans that I sell with Manhattan are going to be the elite level. Okay. So I'm going to sell the elite level 9 times out of 10, right? And actually the 10th time, it's 50-50 on me selling the Classic Plus, which would be for price concerns. And the other half of the time I'd sell the Elite Plus because clients, can afford it and just want the higher plan, right? But most of the time it's going to be the Elite plan. Okay. So you'll notice also that the room and board benefit increases year over year. Okay. So if you go with the Elite plan, you got 4,000 a day worth of coverage in the hospital. For the first year, year two, it runs up to 5,000, 6,000 in year three, 7,000 in year four, and by year five, it maxes out at $8,000. Guys, $8,000 worth of room and board coverage is a lot of coverage. If $2,500 is the average, and this policy's covering 8, and they've got to pay 8, right? They got to pay it, right? And that excess indemnity can also be used for other again, let's say, so for example, the room and board costs $2,500, right? But you have $8,000 benefit, right? So there's $5,500 left over. But the anesthesiologist costed more than the plan provided, right? Coverage wise. So you can pull from that 5,500 to cover some of the anesthesiologist costs, right? So it doesn't have to just be for room and board. Okay. So that's room and board. You also will get an admission benefit on this policy. So again, just the opposite, right? Where major med plans are going to charge you a deductible, right? You're going to have to pay to walk into the hospital. On this plan, you're getting paid. Okay. So on admission benefit on the elite plan, you get $2,000 just for being admitted. So on the first day in the hospital, you get the admission benefit plus the per day, right? So you get 6,000 on the first day in the hospital. Okay. Emergency room, $300 benefit, 2 per calendar year. Remember that benefit. Okay. Emergency room is, again, I'm give you a very quick lesson on medical billing. Okay. Medical billing basically runs on a baseline called reference-based pricing. Okay. So reference-based pricing is basically the baseline for medical billing. Okay. And it's also pretty much in line with Medicare pricing. Okay. And Medicare prices are very regulated by the government, right? So the government regulates, how much a doctor can charge for, everything and anything. And that lines up with how much coverage needs to be provided on the Medicare plans, right? One of the biggest arguments against Medicare for all is the fact that if doctors were to bill everybody at the Medicare rate, right, then they wouldn't become doctors. There would be no financial upside for them to become doctors. And so why would they spend 10 years in, medical school? As much as we want to believe that people become doctors out of the goodness of their heart to help people, right? You have to, have a little bit of realization that they do it for a financial upside, right? So we're going to have a massive shortage of doctors if there's no longer a financial upside. They say they couldn't survive if everybody was charged at the Medicare rate, right? And hence leading to a shortage of doctors, hence leading to the quality of care in this country, right? And then ultimately, you have your major crisis, um, with your one payer system. So that's one of the biggest arguments against Medicare for all. Okay, for people in the under 65 market, that's where the doctors and the hospitals and the medical groups have, they have carte blanche when it comes to their price tags, right? They've got a blank check, right? And you can typically find a surgeon or a specialist um, or a diagnostic test to run in line with reference-based pricing at a rate of 1.5 to 2 times. Okay. In other words, if you're 50 years old, you're under 65, right? And the price tag for, Medicare for a hernia is say $2,000, right? Um, Somebody who's doing a hernia on you at 50 years old, a doctor or surgeon that's doing hernia surgery on you at 50 years old could charge you whatever they want, right? But you can usually find a surgeon to run at about 1.5 to 2 times that $2,000 baseline. So you'll find a hernia surgery for about 3 to 4 grand. Okay. In the emergency room, everything is more expensive. Okay, so in the emergency room, the average price tag is running at a rate of about 10 to 15 times reference-based pricing. Okay. I've seen an Advil billed out at $800. One Advil, $800 in the emergency room. Why do they do that? Hell, I mean, I think it's absolutely insane. But my guess is they want to deter people from going to the emergency room as much as possible, and it's gotten better, right? And that's one of the big reasons that um, wellness is covered 100% on ACA plans. They really want to encourage people to get their wellness checks done, right? So they don't end up in the emergency room for some visit that or for some issue that could have been handled right with a wellness check, could have been caught, right? Because a lot of times people utilize the emergency room for all their healthcare needs, and that clogs up the emergency rooms, right? So that was one of the excuses that I had been given at a conference years ago. Like, why is everything so expensive in the ER? Well, they don't want people going to the ER and clogging up the ER, so they price gouge the hell out of them. So that's your rationale for that. Anyway, that's what I was told. Okay. So remember this $300 benefit in the emergency room. This benefit is so the emergency room coverage is a gap that I like to fill. This is the reason that I'm going to use to add a supplemental policy down the road. Okay. I'm going to fill in the gap of the low amount of coverage in the emergency room. Okay. Urgent care, $300 to the urgent care, 4 per calendar year. Great benefit for the urgent care. 2.5 times the policy fee schedule for a surgeon's fee. Okay. What does that mean? We just got done talking about reference-based pricing, right? Medicare pricing. Well, if you had the classic plan, you notice how it says one time the policy fee schedule. So if you had the classic plan, this policy would cover dollar for dollar whatever is. Okay. It would cover dollar for dollar. If you'd have the plus plan, you get 2 times the reference-based pricing fee schedule for the surgeon. The elite plan, 2.5. The elite plus 3 times. Okay. So the way you'd explain that to a client is basically, the surgeon's benefit on this policy is basically 2.5 times what Medicare covers. Okay. Going back to that hernia surgery, I use that as an example because I currently have a hernia. So $2,000, say Medicare covers, right? So 2.5 times that coverage is what would be provided on the elite plan. Okay. If you have the classic plus, you get 2 times that, right? You get 4,000. The elite plan, you get 5,000, right? Makes sense. If you had 3 times the elite plus, you get 6,000 worth of coverage. And now that's just the surgeon's fee. Okay. That pays the surgeon. Okay. Once again, in surgery, the bill is itemized. Okay. So the surgeon has a fee. If it's an outpatient surgery, the surgery center is going to have a fee. Okay. And that fee is, a facility fee for an outpatient surgery is usually around $750 to $1,500. Okay. This plan's going to pay out $3,000 for the elite, for the elite plus, 2,500 for the elite, 2,000. I don't have to read all these dollar amounts. You can see that. Okay. But that's the surgery center benefit. Okay. Because the way it works, guys, is a lot of times surgeons, where they operate on you is just a facility that they're renting for the day. Right. And rather than pay the rent for the day, they'll pass that cost on to the patient. Okay. So the facility, passes the fee on to the patient. Okay. Then the assistant, there's a first assistant in surgery. And the first assistant in surgery is often the individual that's operating on you. They can do everything in surgery except the initial cut. Okay. So that's really all a surgeon has to do is the first cut. And then if they have an assistant, then the assistant can come in and, do all the nuts and bolts in there. And that assistant has its own bill. Okay. So stay with me here. 20% of the surgical benefit is available for the assistant. So going back to the surgeon's benefit on that hernia, let's say that the Medicare surgery schedule is $2,000 for the hernia. We get 2.5 times that surgery benefit. So we get a $5,000 benefit to pay our surgeon. We'll also get an additional 20% of that surgeon's benefit. Okay. So $1,000, 20% of 5,000 is 1,000. So we get $1,000 worth of benefit to pay the first assistant in surgery. Okay. And then we get 25% of that surgeon's benefit to pay the anesthesiologist. So if $5,000 is the coverage for the surgeon, we get 25% of that 5,000 to pay the anesthesiologist, which would be $1,250, right? So adding it all up, this hernia surgery, let's say we have a $5,000 benefit to pay the surgeon. We get $2,500 to pay the facility. We get $1,000 to pay the first assistant, and we get $1,250 to pay the anesthesiologist. So for that hernia surgery, we have $9,750 worth of coverage. Okay. So if we know that we have $9,750, and I'm pulling these numbers out of the air, guys, but if we know we have $9,750 worth of coverage for that hernia surgery, now the advocacy team's job is to find your client a hernia surgery for under $9,750, which in the case of a hernia surgery is easy to do, right? Again, if those were the numbers, which it's close. And I've actually had a client that had a hernia surgery done, and $4,000 was the price tag for the surgery, all in, right? It was the bundled price. And the plan, now this customer had a Philadelphia American plan, and the indemnity plan paid out $12,000 worth of benefits for that hernia surgery. So this client got an $8,000 check to have their hernia repaired. Okay. They pocketed $8,000 to have a hernia repaired. Okay. That's a real life scenario. And in fact, when I had my agency, I had a back office. I actually had a copy of that check. I'll see if I can hunt that down for you guys, but I had a copy of that check that I used to use. I blacked out what needed to be blacked out, but I used to use that check in presentations, and I would use that that circumstance as an example quite often. right? To explain to clients, this is how the plan works, right? And this is how you become a consumer of your healthcare. Okay. All right. So we'll cruise through the rest of this, guys. So, um, doctor's visits, staying on the elite, $175 per doctor visit. You get 10 covered, okay, per insured. All right. Up to 5 will roll over. So if you only use 5 in the initial year, then you'll go into year 2, you'll have 15 doctor visits. Okay. Think about that in terms of the value, guys. All right. Think about that in terms of the value, real quick. I just pulled something out here real quick here. So I had a client here paying $715 a month for an elite plan. $715 a month for an elite plan. There's 5 family members on the policy. 175 times 10 is 1750. That's how much the policy will pay out, right? For that family of 5, right? If everybody meets their doctor's visits. Well, there's 5 of them. Okay, so 1750 times 5 is 8750. Then they also get a $300 wellness benefit. Okay, that doesn't, those 175 are just doctor's visits. Okay, so there's a $300 benefit once a year for a wellness exam as well. The physical pays 300. Okay, so that's another 1,500 for that family of 5. So just on the doctor's visits alone, Manhattan Life is ready to pay out $10,250 for doctor visits for that family. Okay. And they're paying $715 a month. $715 a month times 12 is $85.80. So if this family exhausted their doctor's visits, right, which is a lot. I mean, that's right. Wait, 55 doctor visits for the year. I mean, that's a lot, obviously. But let's just say hypothetically they exhausted their doctor's visit. Manhattan Life's losing money, big time, right? So again, the reason I illustrate that is because I want you to think in terms of value, right? Because you guys will often hear me say that in terms of value for what you're paying and what you get out of this plan, there is not a higher value on the market today. And I believe that. Okay. And I believe that. All right. So that's doctor visits. Prescription benefits. Prescriptions is always going to be in reimbursement. Okay. So clients are going to get a discount card. And actually, guys, GoodRx, I think, works just as well, if not better, than the discount card that they get. I always send my clients to GoodRx. I love GoodRx. But the point is, they're going to get a discount card, and they'll pay the price of the prescription at the counter, and they'll get the discount. Then they'll submit the receipt to Manhattan Life, and they'll get the reimbursement. Okay, so they get $50 per day reimbursed each time they have a script filled. Okay.
Drew,
Some outpay. Yes. Got a
if I ask
question?
a couple questions, yeah. Back to the last section, real quick. If I have a wellness doctor, like they don't take insurance, does that matter, or can I use this plan for those kind of cases?
So you're talking a direct primary care doctor?
Yeah. There's
You
certain
can get reimbursed, yes. So and that's becoming a lot more common these days. Where and I do the same thing, guys. Where I go to a doctor, doesn't take insurance, right? My wife is totally holistic. She's on that lifestyle,
yeah.
right? And yes, so you can get reimbursed for those doctor visits. And I'll expand on that real quick too, since we're on it, since you brought it up, right? So there's 2 ways that the benefits on these policies can be assigned. Okay. It is connected to a PPO network called the First Health PPO network. It's one of the largest PPO networks in the country. There's over 1 million providers that are in that network. Okay. And if your clients see a doctor that's in the network, it works the exact same way that any other insurance policy would. There's no copays to pay. They'll show their card. The doctors will submit the claim to Manhattan Life directly. Manhattan will pay them, and it'll be, a sunny day in Florida. Done deal, right? Um, if the clients go to a doctor that's outside of the network, right, then they can still get the benefit for that visit, but it's going to be a reimbursement, right? So they can use any doctor that they want with this policy. It's just a matter of how are the benefits going to be assigned, right? And to that point, I do have clients that utilize direct primary care doctors and holistic doctors that don't take insurance. And these policies are the route to go for those clients 100% of the time. Okay.
Oh, perfect. The other question
Uh,
I had was you mentioned the reference based pricing. And I know that's a big selling point for a health share company out there called Impact.
yeah.
Is there a team that can negotiate that down like what they have or better route?
Um, I'm gonna do an entire training on advocacy. Actually, I'll talk to Phil about that this week. Um, about when we're going to train on advocacy because I have an advocacy firm called VCare, and I believe that the advocacy membership is something that you should sell to every client that you sell health insurance to because yes, it's very important to have a quarterback, as we call it, steering the bus for your client's healthcare. All right. That's the whole point, right? Is educating your clients on how to be consumers of healthcare so they don't become victims, right?
Okay. And so they'll negotiate down the cost. And
They'll do care navigation to find the cost, right? And negotiating down a price tag on the upfront is difficult to do usually. But if they can negotiate a bill on the back end, right? That's another service
right.
that's provided. So finding the cost of care on the upfront is one part of the service, and that's the main thing that we want to educate, our clients to know the cost of care going in. But if they receive a surprise medical bill on the back end, or they were price gouged for something, the advocacy team could then negotiate that bill down.
Okay. Got it.
All right. All right. So let me fly through the rest of this, guys. So you've got some diagnostic tests here. Colonoscopy, again on the elite, $600 benefit. We use we use a service called Colonoscopy Assist. We usually find colonoscopies for clients for about $1,200 to $1,300, guys. So in the case of a colonoscopy, they may have some out-of-pocket costs. But that's for a clean colonoscopy. Okay. Let's say that in the colonoscopy, that polyps need to be removed. Okay. If polyps need to be removed, that then goes into a surgery benefit. Okay. Because now it's a procedure. All right. So, clients may squawk for a second at the fact that they may have $600 or $700 out of pocket for a colonoscopy, but hey, the average cost of a colonoscopy is $3,500, right? So if we can not only, get you a colonoscopy for 600 or 700, but we can keep your premium down to a reasonable amount, it all balances out, right? It's going to make a lot of sense in the long run. So that's a colonoscopy benefit. Okay. Preventative services, wife's female exams, mammograms, $300 benefit for each. Okay. And everybody gets a $300 physical, $300 benefit for a physical annually. You guys can kind of see the rest is just some outpatient diagnostics, MRIs, PETs, $6,000. Again, I'm on the elite, $6,000 annual maximum per person for outpatient benefits. Okay. Ambulance, outpatient radiation chemotherapy. Okay. 40 days per calendar year, $2,000 a day. Right. Annual maximum is $1 million. Okay. Lifetime maximum is 5 million. I've been in this business for 20 years. I've only had the most I had a client reach in medical bills annually was not even $500,000. It was like $408,000. So I think these these maximums are, it's smoke and mirrors. It's to enhance the sales pitch, right? So, Mr. Jones, we're going to be talking about a limited benefit plan, but here's the limits: $5 million lifetime maximum, $1 million calendar year maximum, 10 doctor visits covered per year, plus a wellness visit, right? You think that those limits are going to be adequate enough for you and your family, Mr. Jones? Yeah, I think those are going to be fine. Okay, so the limits are high. There is a premium, a pricing grid here. You guys will love this. There's no rate increases. Okay. Average health insurance rating premium increases are 3 to 5% per year, right? Manhattan Life does not increase. I have a client that's been paying $168 for like 8 years, and he just got a claim. It was the first time I talked to him in years. Actually, he got a claim. I was talking to him this morning. He had a $2,000 claim. He paid out of his pocket. He got a reimbursement check for, I think, $1,500. So it ended up costing him $500 out of pocket. But this guy's in his mid-50s. He's paying $168 for health insurance. He has been for almost a decade, right? So he could be happier, right? So no rate increases. Once they get locked into the price tag, that's the price tag until they're 65. We talked about the network and benefits flow, all right? So First Health Network, okay? Benefits can be assigned to the doctor. Now, we'll tell you this real quick. And I'm trying to move fast now, guys, because I know I want to, I'm probably going to run a little bit past the hour, but I won't run much. If a doctor submits a claim and sees that there's $175 benefit for an office visit, let's say they have a cash price of $125, okay? They're not going to, in most cases, they're not going to bill Manhattan Life $125, so your client will then get a check for $50, okay? They're probably going to bill Manhattan Life $175 and keep 100% of the visit. Okay. That's usually what doctors will do. And they do, it's what I call they play the billing game. Okay. And just like they would do that with Manhattan Life, if somebody came into the office with Blue Cross Blue Shield, right, for an annual exam, they may bill Blue Cross Blue Shield $2,000 because they know Blue Cross Blue Shield's got to pay it, right? So they play the billing game. All right, guys. So and a lot of clients will be happy to not get a reimbursement just to know that they don't have to come out of pocket. But let them know, if it's something they want to do as a consumer, right, and play their own billing game, their own pricing game. 100% of the time, the best deal for them is going to be to pay the cash price and submit the claim directly to Manhattan, get the reimbursement. And the reimbursements come out pretty quick. All right. It's 2 to 4 weeks, but it's closer to 2 weeks. Right. I've seen it take 4, right? But most of the time, guys, it's like 2 weeks. Okay. This is the prescription discount card that your clients will get. Again, good RX works just as well, if not better. We also have our advocacy team has a deal with, I can't think of the name of the guy's company right off the top of my head, but his name's Marty Portnoy. I don't think he has any relation to Dave Portnoy, but Marty Portnoy is his name. And I call him Marty the drug guy. Now, what Marty the drug guy can do for us is, let's say there's a, specialty brand name drug that doesn't have a generic out, and the drug costs $2 or $3 or $10,000 a month, right? Marty has the ability to obtain that exact same drug from another country, right? A lot of times it could be Turkey or India or Canada or Hungary. Exact same drug, 90-day mail order program, and usually it's a 95% savings. All right, so we do have the ability to help clients with prescription drugs when they're prescribed something that is just ridiculously priced. Okay. Green Imaging, again, so imaging center. Just the other day, I had a client needed an MRI. That's why I use that example, quite often. $600 benefit for the MRI. She went to Green Imaging. Actually, our advocacy team did, but sent her to a Green Imaging partner. We got the MRI for $400. She pocketed $200. All right. So these are, just some of the services that we use. Easy Care to Go. All right. So that's telemed, teledoc. They've flipped telemed providers, over the years. Now I guess it's Easy Care to Go, which is who we're rolling with. But unlimited teledoc, it's free. So I tell the clients like this, guys. I say, here's the way you want to utilize your doctor's visits. Okay. Number one, you want to avoid the emergency room like the plague, right? Because like we said, everything is more expensive in the emergency room. So when you can diagnose yourself, right? Like, you have strep throat, or you'll come right back with a Z-Pack, right? You can diagnose yourself. In the case that you can diagnose yourself, utilize a teledoc visit. Okay. Call the doctor, get a prescription called into your nearest pharmacy, go get it, be done with it. Right. The next route to go if you're sick is going to be an urgent care. Okay. You get 4 covered per year. You got a $300 benefit to the urgent care. That's a great benefit to the urgent care. All right. Go to the urgent care, right? Or excuse me, in this sorry guys, in this order. So teledoc, regular doc, then urgent care. That's the order that you want to go in, right? Because in severity, right? And that's if you're sick. Okay. If you have to go to the ER, you have to go to the ER, right? That it just is what it is. Okay. Go to the ER. The odds are good you're going to get hit with a bill. There's going to be some price gouging situation, and we will get our advocacy team involved when that happens. Okay. But if you're sick, we want to stay out of the emergency room. Teledoc, regular doc, urgent care, in that order. Now, if you have an injury, right? Little Johnny, breaks his arm falling off the jungle gym. Okay. You don't call the advocacy team. You just go to the emergency room, right? And this is how I sell supplemental products. Okay. All right, guys. So you got, again, so you got the teledocs, you've got the labs. That's the indemnity plan. Okay. Oh God, these Zoom controls are always getting in the way. All right. So that's the indemnity plan. Real quick, I want to burn through the supplemental plans, okay? Because you're going to bundle sell, okay? 9 times out of 10, I'm selling the elite, okay? So I'm going to sell the elite. There's 2 accident plans, okay, depending on state availability, but most states are going to offer both of them. You've got 24-hour accident and you've got accident insurance. 24-hour accident is a lump sum benefit, okay? Accident insurance is an indemnity. All right. So a 24-hour accident benefit, you've got 2 units, or excuse me, 1 unit and 2 units. Okay. 1 unit is a $2,000 accident medical expense benefit. 2 units is a $4,000 accident medical expense benefit. All right. And I was going to open up these brochures, guys, but just for time purposes, I'll leave that to you. Okay. You guys, all these brochures are off to the right here. Okay. And you can grab them. But it also will pay out an accidental death benefit, and there's loss of limb, loss of sight, loss of hearing, right? There's an AD&D benefit built in as well. So I usually will sell the 24-hour accident 2 units. So I tell them, Mr. Jones, this is an extra $4,000 worth of accident coverage when the emergency room cannot be avoided. When you have to go to the ER for that injury, you've got this extra accident coverage, and I put it in there specifically for that. Now, this $4,000 benefit will pay out in the event of any accident or injury, but I'm putting it in there specifically for the accident where the emergency room cannot be avoided. Make sense? Yes, it makes sense. Okay. So again, accident insurance is indemnity, where it says, we'll pay $100 per day if you're hospitalized for an accident, or we'll pay to $5,000 for a surgery that's needed in the event of an accident, right? So an indemnity plan where it pays set amounts for different occurrences. Okay. Then you've got critical illness. Okay. Cancer Care Plus. Okay. Cancer Care Plus is an indemnity. Okay, same thing. So when you guys hear me say indemnity, that's what I mean. Where, okay, if you have a heart attack, right, then it's going to pay out, 50%, right? If you're diagnosed with cancer, it's going to pay out 20%, right? So Cancer Care Plus, I like to steer away from indemnity plans on the supplements when I can do lump sums. Okay. So Cancer Care Plus and accident insurance are your indemnity supplements. Cancer, heart, stroke are lump sums. Okay, and it even says lump sum cancer. You can go lump sum cancer, heart, stroke. Okay, so I like to sell lump sums. And then you got critical illness. Okay, and then critical illness with cancer. Okay, I don't know why you'd sell a critical illness plan without cancer, right? It's like the most important critical illness, right? But so those would be the critical illnesses I would sell, either the lump sum cancer, heart, stroke, or the critical illness with cancer. Okay, and what gap are we filling with a critical illness policy? Well, Mr. Jones, we're filling the gap of your income. If God forbid you're diagnosed with cancer, or you have a heart attack, the odds are good that you're going to be out of work for a while. Wouldn't you agree? Yeah, I'd agree. Great. Well, you're going to have enough stress, to deal with, in the form of your health. We don't want to add financial stress on top of that. Okay, so let's get you this critical illness plan. And I also do ask the question, guys, when I'm presenting. I say, Mr. Jones, if 60%, actually, I think it's 65% of all Americans will suffer a chronic illness in their lifetime. So when that day comes, not if that day comes, but when that day comes, Mr. Jones, what would you rather I send you? A get well card or a check for $30,000? I've asked customers that, and I'm sure you guys can imagine, I don't often hear the answer of a get well card. Okay. And then you got dental, dental, vision, health. The select plan. So you've got dental, vision, and hearing select, and dental, vision, and hearing insurance. The select plan, the main difference is the select plan will have ortho coverage. It's up to $1,500 benefit, up to $1,500 benefit, and they'll pay 50% of orthodontics after year one. Okay, so there's a year waiting period. All right, but that's the main difference. So dental, vision, hearing select, and then dental, vision, hearing insurance. The select is going to have the ortho. Okay. And again, guys, dental, vision, hearing sells like French fries. So if I was quoting myself initially, I would build this plan. I'd sell the Affordable Choice Elite with the 24-hour accident, and I'm going to add the critical protection and recovery, which is the lump sum critical illness with cancer coverage, $10,000 check. And there's actually, I could probably find a better critical illness right outside of Manhattan, but in the spirit of not confusing a client, when I send the quote initially, I always send it with the same carrier. All right. So, but when I get them to the setting of presenting, right? Like, let's say I've got them on the Zoom and I'm presenting now, and I've got them bought in to the elite plan. I'm probably not going to change that. I've got them bought in to the idea of filling in the gap of the outpatient accident where the emergency room cannot be avoided. So they understand the need for the accident plan. I've got them bought in on the critical illness benefit, right? And I'll probably tell them like this: okay, Mr. Jones, I got $300 here too for the whole package. Okay, give me a minute. Let me see what I can do. Let me reach into my bag of tricks here, and let's just do a quick shop and let's see if we can find a better deal on accident or a better deal on critical, right? And so that's how I may end up with a Manhattan plan, an affordable choice plan, a plan enhancer benefit from Allstate, and a critical illness plan from, Allstate or Occidental, right? But when I'm sending the quote initially, I send it with the same carrier all the time because I don't want to confuse them. I don't want to send them 3 emails with, 3 different proposals and then another email saying, you got to package all that together, right? Because ultimately I'm going to sell it as one package to Mr. Jones. And then I'm going to, once I have them closed on, they're closed on all of it, right? They understand the need for all of it. Now I'm going to play with the numbers a little bit and the carriers a little bit. Okay. So that's what I would do. And then again, dental, vision, hearing sounds like French fries. Mr. Jones, would you like to add dental and vision to that? 50% of the time, they're going to say yes. Okay. So I may add that. So let's just say I was selling the Manhattan supplements. Okay. Let's say they don't want the dental and vision. Okay. So for this 46-year-old single male, I'm getting them an affordable choice elite plan, a critical illness policy, an extra accident policy for $300, and I'm going to add a $12 per month advocacy membership, right? So we're looking at about $314 all in for an insurance policy that I'm going to sleep well at night knowing my customer is covered with. Okay. And then to enroll them, you'll click on begin enrollment. And I know you guys are life insurance agents, so you guys have done some, way more elaborate applications than you would do with this stuff. Like if you guys have ever done an IGO application, this is something you will absolutely breeze through. All right. But that's how you'll get to the application. All right. You'll add in, the applicant, the questions, the email, the payment, right? You'll do your little agent statement, right? Yes, I answered everything accurately. I'm 100% commission coming to me, right? And then you validate it all and you submit it, right? And that's it, right? It submits right away to Manhattan Life. It's a done deal, all right? They don't have to sign anything on their end. It goes directly into Manhattan because you're going to get one of the questions you're going to ask is going to be a security question, right? Which is going to be mother's maiden name of the primary. All right. So mother's maiden name of the primary, and they'll use that security question to set up their portal. So they'll have to pull that out. But that's ultimately will serve as their signature. Now, other carriers and other applications work a little bit differently, right? Where they may have to read a PIN number back to you or do a DocuSign or something like that. But that's how Manhattan Life works. You can just submit it, put the mother's maiden name on the application, and it goes right into Manhattan for underwriting. The first payment will be drafted on the effective date. Okay, so if I set up the effective date for say June 1, I did a deal today and set the effective date for June 1. It may get approved May 5th, right? Cinco de Mayo, but it's not going to be in effect till June 1. And that's when I can expect it to be on my commission statement. Okay, shortly after that. All right. But Manhattan usually approves quick. They're, right now they're approved within, 48, 72 hours. Okay. During open enrollment, just like all other health carriers, it's a little longer. It might take a week, might take a week and a half, right? They get a little bit behind at that time, but they're pretty quick these days. Okay. So again, guys, that is again, we burn through it here at the end, but that's Manhattan Life. All right. I love Manhattan Life. I think that we're going to sell a ton of it because when I always go back to this, when it comes to value, there's no better product on the market in terms of what you get for what you're paying. All right. And that's going to be the majority of the customers, right? That's going to be what they're looking for. Okay. So let me go ahead and hit the kill switch here. Are we done recording?